One of the things I've talked a lot about is a lot of you ask about when to sell. But one of the things I talk about is lifestyle chips. And this is different to selling and taking profits. My preference has been actually to ride the down wave and keep adding, but I will take some lifestyle chips off this time. So many people I know still have PTSD from round tripping the cycle. I didn't because I wanted to round trip the cycle because I wanted more weakness to add in because I have a longer term view. But it's really important to take some lifestyle chips off.
The much-awaited banana zone is in full swing, and crypto asset prices have taken off sharply. In the past week alone, Bitcoin, the world's largest crypto asset by market cap, has reached multiple all-time highs in the past week, smashing previous records and hitting a new peak of $90,243 on Tuesday, according to data from CoinMarketCap. The CMC Crypto Fear and Greed Index, a tool that analyzes market sentiment at any given period, is now at 85, or extreme greed, its highest peak since prices took off sharply in March, following the very successful launch of BlackRock's IBIT and other spot Bitcoin ETFs. While there is a lot of excitement about the ongoing rally and what lies ahead for the cryptocurrency market, especially in December and early 2025, investors are equally as cautious. Many are speculating about the appropriate time to take profits and exit the markets before the next crypto winter begins. For Real Vision founder and CEO Raoul, profit-taking is a multifaceted issue that must be appropriately timed to avoid missing what he describes as the best investment opportunity ever given to humanity. Pal believes the best approach to investing in the cryptocurrency industry is having a long-term time horizon and riding the wave during both upside rallies and drawdowns. However, for those who have urgent needs, Pal says time, instead of price expectations, should be your guiding light for determining when to begin taking profits during every cryptocurrency bull market. During a recent live stream on his Raoul The Journey Man YouTube channel, the former Goldman Sachs executive reveals that he will be taking some profits next month or early next year to take care of some personal expenditures. During the live stream, Pal stressed the importance of rewarding yourself by taking some lifestyle chips and the best strategy to do this without completely ruining your portfolio before the next cycle begins. He also discussed the banana zone, showcasing important charts about crypto and macro summer and fall, and why he believes this is going to be a blow-off top cycle like 2016. As we bring you clips from the live stream, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
This, my friends, is the banana zone. This is when we've had 8 months of consolidation, you've all lost your minds, and then the simple God candle arrives, and suddenly we feel good. Lord Vishnu blesses us with the God candle, and we can all go about our business thinking we're the smartest people in the world. But we're not really. It's actually driven by global liquidity. You've all seen this chart before. Every time global liquidity breaks out, it goes through this consolidation pattern. As liquidity tightens, it breaks out. Crypto breaks out with it. Now, global liquidity is contracting right now, but it did break out to a new high. It's expected to break out going forwards, and I'll show you that in a second. So we're at the point where crypto does really well, which is the banana zone. Crypto follows global liquidity. Does it really well. It's got an 87.5% correlation. Global liquidity comes in these seasons: spring, summer, fall, winter. Again, I've covered these a lot. We are in summer. If you look at the summer periods of that weird mustard orange, we always have a strong market in liquidity. So that's the debasement of currency that makes our number go up. Our number go up is Bitcoin. Bitcoin is the benchmark asset. And again, we go further out the risk curve. Late summer and fall is all about the risk curve. We'll come on to that. But if you look at the mustard periods, it's always gone up in summer. In fact, so is the NASDAQ. All risk assets always go up. Election years, same thing. Presidential election cycle, all the same thing. And then in fall, we tend to have a good rally, and then we top out eventually. Twice it's been at the end of the year. Once it's been kind of towards the end of the year with that weird double top pattern, which I don't think will be repeated, but everyone has PTSD from. All you have PTSD. Because once it didn't extend, And everyone's like, oh my God, I need to sell early. I need to sell early. I get it. I get it. I get it. I will help you with this. You'll see some of the things, the indicators that will help you. I will try and get you to get that right. Global M2, another indicator of private sector liquidity, Bitcoin, and that, very good. We're having a little correction now. I don't think it comes back to 80,000, but who knows? But either way, it's doing exactly what it's supposed to be doing. Even better, the GMI total global liquidity, 10-week lead. It's been spot on, kids. Spot on. Will it always be spot on? No idea. But it tells us that we should be early to mid-December, hit 100,000, and then have a bit of a correction. That makes sense because a lot of people square their positions, take profits, etc. Particularly now the institutions are there, they do their rebalancing. So then let's say we'd have a 20% pullback from, I don't know, 100,000 back to 80,000. And then you have the face ripping rally as everybody comes in with a fresh P&L the beginning of the year. And by kind of first week of January, we just start ripping and it becomes unbuyable period of the banana zone. Happened last year, actually. So Bitcoin halving seasons, we're in the pinky one at the bottom. It's now in line with the 2016-17 halving, which is, I think, the most likely outcome, and dragging behind the previous halving because the liquidity was front-end loaded because of the pandemic, and then back-end it got taken out early. This time around, it's more normal. It's very similar to 2016 cycle where liquidity was given by the Chinese and the US didn't add enormous amounts of liquidity. Very similar this time around, trading very similar to that time. Here is that cycle versus today's cycle. And as you can see, very, very similar.
Instead of a stunted bull run like we had in 2021, Pal is expecting a true crypto blow-off top cycle, similar to the 2016-2017 bull run that saw Bitcoin's price climb from below $1,000 to almost $20,000 in less than 12 months. Pal is expecting all the bullish euphoria, speculation, and wild risk-taking that accompanies such cycles, especially if central banks like the US Federal Reserve resume printing fully in 2025. Pal believes this is only the first half of the banana zone and cautions there will be a brief intermission during tax season in March, marked by significant price declines before prices take off sharply again. Like every crypto bull market, there's going to be a lot of craziness, excitement, sharp rallies, and equally sharp declines. Amidst all of this, Pal says you should consider taking some lifetime chips off the table, enough to reward you for sticking through the anguish of crypto winter, but not enough to ruin your chances of enjoying the massive opportunity this space presents for more years to come. Here are more clips from the video.
One of the things I've talked a lot about is a lot of you ask about when to sell. And there is, again, another video I've done about that. I will update you. We're nowhere near the selling point yet. I will help you the best I can. I will not pick the top. I will it up. I will either sell too early, sell too late, but I will do the best that I can to help as many people as possible in this cycle, because it's the same for me too, right? My hopes and dreams are in this as well. But one of the things I talk about is lifestyle chips. And this is different to selling and taking profits. My preference has been actually to ride the down wave and keep adding, but I will take some lifestyle chips off this time. What lifestyle chips mean are securing the quality of life of your dreams, that vision of your future self, whether it's a better house, better car, that amazing holiday. Well, sometime in the crypto bull market, you will have the opportunity to do that. And if you get too greedy, you won't take it. And then you get really greedy at the peak of the bull market and you'll miss it. And then before you know it, all your hopes and dreams have failed. And you're like, why did I do that? So many people I know still have PTSD from round tripping the cycle. I didn't, because I wanted to round trip the cycle, because I wanted more weakness to add in, because I have a longer term view. But it's really important to take some lifestyle chips off. Take about a third of your portfolio off and buy the things that matter to you. Give yourself a reward for the pain and the hardness of going through the crypto bull market. And we're all psychotic lunatics to go through such a volatile asset class. And when payday comes in bananas, you've got to take some money off. So do that. I will do it. I've said probably the end of the year, regardless of price. It may be February, whatever, but it's not about trying to time the top. It's about trying to make me feel good about myself, that I've de-risked, increased my lifestyle. I've taken my lifestyle ratchet up one more because people can't take it away. And that is incredibly valuable, because the root of happiness is meeting that vision of your future self. And the more you deviate from that path, the more unhappy you are. Doesn't mean you have to be wildly aspirational. It could be very simple stuff, but just give yourself that chance of saying, I've achieved this. I've done this. It's a marker point in my life and it matters. And I worked for it. And I went through the bullshit and I was on X all day, shit posting and reading conflicting things where we're all going to die. We're all going to be rich. We're all going to die. We're going to make it. We're not going to make it. We're going to make it. Everyone's an alcoholic because of this and everybody is addicted to nicotine. It's impossible otherwise. I've never been in anything like this before. It's the most volatile space. And I've been here since 2013 in crypto. And me, it doesn't get easier. You just have to learn how to psychologically adjust and not absorb the crowd's emotions. That's the hardest thing. The crowd's emotions is the big one. I try and avoid that. But you lot, you just lose your shit every time. Oh my God, the market's down 3% today. We're all going to die. Oh my God, the market's up 3% today. We're so rich. We're all going to... Just stop all of that. It's a long-term cycle. You know where the price is going. You don't need to do that. You don't need to count on Twitter, hey, another 1,000 in Bitcoin. It's just like, it's pointless. You kind of know where it's going. Just hold on. Do your thing. Don't get carried away. Don't get carried away by hubris. You're not a genius. You are brave for having to deal with this shit, but you are not a genius, and nor am I. We've just been given a gift. It's like this fucking divine thing that happens, this 4-year cycle. And so the only gift we've had is being able to see that it's there and taking it.
For those with no urgent needs, Pal advocates the buy and hold strategy, at least until 2030, when he believes the entire space would have increased exponentially from its current $2.9 trillion market cap to $100 trillion. Between now and then, all investors still have the opportunity to be a part of this important industry by buying solid, proven projects like Pal suggests. You can choose to buy and hold in the long term, regardless of market conditions, or dollar cost average to regularly increase your crypto holdings. Investors can also decide to time the markets and buy low to sell high. Anonymous Bitcoin analyst Plan B says you can achieve this by buying 6 months before each halving and selling 18 months after each halving. In his words, this strategy will yield 4 times more profit than the buy and hold strategy. Which do you think is the better strategy? Sticking through during bull and bear markets, or trying to time the markets to exit at the top and get back in as it bottoms? Or just frequently taking small lifestyle chips, as Pal suggests? Let us know your preferred strategy, as well as comments on Raoul Pal's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.